Hello everyone, welcome to the Ichimoku.co daily analysis for the S&P 500 for the trading day ending Monday, February 3rd, 2014. Well, a very exciting trading day today, a very substantial sell-off, the market trading through the important 1775 level of support, and that level had been tested on 4 of the last 5 trading days. And prior to that it had been a major area of support, and before that an area of resistance. A very important level for this market, and it's been blown away in a very decisive bearish manner. The sellers have very strong control of this market at the close of the trading day today, and they've shown very strong commitment to taking this market lower following the small congestion area that was bound by the 1775 level of resistance and the overhead, the 1775 level of support and the overhead resistance around the round number 1800. The market 2 trading periods ago attempted to rally back up to the 1800 level, was rejected in a minor way and also rejected from the top of the cloud. That area coinciding with the top of the cloud made that a very strong level of resistance. And for the day prior to today's trading, we had a change of trend to the downside, a candle with a lower high and a lower low, finding support at 1775, and today taking out that area. Significantly, today's trading has also taken out the Ichimoku cloud, and that now gives us a bearish market in the long-term time frame, and it may be very significant for this market, where the market was previously trading up above the cloud for quite some time, since early September, and then finding support around the cloud. Now we have the market trading below the cloud, so we may be in for a bearish market in bigger picture terms on the daily charts. In terms of the faster time frames, the market is also bearish in the medium and fast term time frames, trading below the Kijun-sen and the Tenkan-sen, and if we look at both of those indicators, they're both pointing down fairly sharply. And this is the first time in quite some time that the Kijun-sen has been pointing down, and it really does reflect very solid downside momentum in this trend in the medium term time frame. Also, if we look at the peaks and troughs here, we have establishment of a second time frame downtrend as well. Here we have a peak, a trough, a lower peak and a lower trough for today's trading as the market took out that area, confirming, so the price action has actually confirmed what we've seen in the Ichimoku charts, and the Ichimoku charts gave us an early warning of this trending action with the bearish breakout that occurred earlier, about a week or so ago, week and a half ago. Today, confirmation of that with this strong bearish activity down below the previous trough. If we look at the price action, the characteristics of the price action here as the market came off this major high at 1850, very large black body candles, leading to some congestion and the market finding resistance around the top of the cloud and congesting there, and the retracement of this downtrend really wasn't quite significant, and then the sellers have come back into this market strongly, so we were looking for bearish activity down below that 1775 level, and that's what we've seen. Now there is potential for the market to trade lower, but I suggest we should be watching this area around this highlighted yellow zone just above the 1729 level. It was a window that was open some time ago and hasn't been tested since it was established in late October, mid to late October, and it may provide very solid support for this market for tomorrow's trading. When we consider that we have had an extreme trading day today, it's likely that the market will have something of a rest, and that may coincide with this window area and the area around 1729, this previous resistance level, this previous swing high. Now, in terms of the Fibonacci extension, we're examining the relationship of this first time frame downtrend that the market's into the previous time the market was trending down, and as you can see, we've had a very dynamic trending action in that first time frame and in the second time frame, so very efficient trend here to the downside. The market has traded through the important the 50%, 61.8% levels, tested almost to the 78.6% level. That will be important tomorrow, but there is an opportunity for the market to trade down to around the 100% level, which is at 1718. In terms of the Fibonacci retracement of the prior uptrend that the market was in, it's not a significant uptrend, but the market has traded through the important levels, through the 161.8% level in a bearish manner, suggesting that the market could trade down to the 261.8%, trading around 1724, coinciding roughly with the potential support around this previous swing high. As I've mentioned, in Ichimoku terms, we now have a bearish market in all three timeframes, with the market trading down below the cloud. The Chiker span here is now below the corresponding price action, and confirming the negativity that we're seeing in the market in all three timeframes. One thing to look at, however, is the distance that the Chiker span is trading away from the corresponding price action. It is a fair way away, suggesting that the momentum is very strong, but it is beginning to look a little extreme, and it wouldn't surprise to see the market once again attempt something of a retracement or something of a congestion area, as we saw here previously, because we have had quite an extreme day. And that's the reason why we do need to watch this window here around 1736 down to about 1733, and then just below there the 1729 level of previous resistance.